Well, joining me now to break down everything that we need to know about this earnings season big picture is Christine Short, head of global corporate events research at Wall Street Horizon, a TMX company. Christine, thanks for joining.
Of course. Thanks for having me.
All right, so you are our expert here. What is the expectation for this earnings season?
Well, as we were talking before the segment, the vibes are a little off, right? We're starting the season not in as positive a place as maybe we started the Q4 earnings season. Even though all of the big banks that reported on Friday and that kind of kick it off, JP Morgan, Citigroup, Wells Fargo, they did beat on the top and bottom line, but we saw stocks still tank. I think some of that had to do with comments. We're always really looking particularly at Jamie Dimon, CEO of JP Morgan. And he said, look, there's still inflationary pressures. There's an unsettling global landscape right now. And so I think some of those comments really resonate. Although you have Jane Fraser at Citigroup saying, look, we still expect a soft landing. So the environment's not terrible, but it's between that and then the expectations on Friday for the Iran missile strike in Israel. Like you said, didn't maybe turn out as bad. That was thwarted. But now we're still looking for what the response might be. So there's a lot of uncertainty. And I think heading into last season, the sentiment was higher across the board from CEOs, from consumers, and from investors. And so you're heading into a season where there's a little more uncertainty, but happy to see that things are back up after 2 down weeks for this beginning of the quarter. But it's good to see that investors are feeling a little more positive heading into today.
Yeah, so what is the expectation in terms of S&P earnings growth? I think the estimate that I saw was roughly about 3% or so for this first quarter, right? Obviously, This reporting season covers the first quarter of the year.
Yeah, so it's dropped a bit. That was heading into last week. That's what it was. It was about 3.2%. As of Friday, it was just under 1%. A lot of that didn't have to do with reported results because remember, that's a blended rate. So that includes both companies that have reported and estimates for those that have yet to report. So analysts actually went in and revised downward for companies that have yet to report. And I think a lot of that has to do with these higher than expected inflation readings, pushing down the number of cuts from the Fed this year, and some of the comments, like I said, on Friday. So analysts went down and ratcheted down a bit. But remember, even though it's only about 1% for the EPS expectation of growth for this quarter, that usually is pretty conservative. We end up usually about 4 to 5 percentage points higher. So that could get you in the mid-single digits, but I just think it's interesting that they've cut so much, as we just started the quarter.
But it's interesting because we'd seen, and correct me if I'm wrong, but I think I read that corporate sentiment was pretty good. I would say up until these past 10 days or so, right? Dividends, buybacks, both of those did seem to be on the table.
Yeah, last quarter, dividends and buybacks were the highest they've been in a couple of years. And so that's positive. Companies are returning value to shareholders. They've got a lot of cash on hand. So that's still in play. And we calculate something called the late earnings report index that shows corporate uncertainty, CEO uncertainty. We have yet to release that for this quarter. We're actually going to send it out tonight. The reason we haven't released it is because it was actually quite high, showing uncertainty might be, we actually had to relook at the data because it's much higher than we've typically seen the last couple of quarters. So we want to make sure there's not seasonality there, but it seems to me that CEOs might be a little uncertain still. And we thought maybe there was an end to that starting this year, that companies were feeling a little bit better about their position, but you're right, they're still very cash heavy. We're expecting earnings to be, very good, growth to be good, but still there's some things that still need to be worked out, right?
Interesting. And so in terms of what you're hearing, the CEO commentary, did it seem as if that kind of too had transpired in these past 2 weeks or so? And what were the major uncertainty concerns there?
Yeah, look, like Jamie Dimon said the same thing last quarter, and again, the markets really react to what he says. So, and it's no surprise, there is inflationary pressure. Like, look, we saw CPI the other week. PPI was actually a little bit better than expected. PCE, which is the main inflationary indicator that the Fed looks at, has yet to report for March. That's been a little bit better the last couple of months, only at about 2.5% to 2.8%. But the Fed says their target inflation rate is 2%, and it doesn't look like we're getting there. And remember, we started the year expecting about 6 cuts. That's now down to about 2% or 2 cuts. So that's the probability has shifted. Investors are pricing that in. Later cuts, less cuts. And so I think you're still seeing that in the commentary. But as we go on, it is certainly getting priced in. We saw the first 2 weeks of this quarter, take a bit of a hit, but I think you're seeing that priced in at this point.
What should our viewers know about seasonality? I mean, typically we do see money come into the market at the start of the year.
Yep.
So our viewers, have been able to follow along with that in terms of market action.
Yes.
But in terms of what you observe from a company perspective, is it the case seasonally that usually the first quarter is pretty robust and then we would see a dial back in the second quarter?
Yeah, that's true. I think you also see even reporting in the fourth quarter is a little bit different just because of how the holidays follow. This quarter, at the tail end of Q1 coming into Q2, there was a little bit of difference because you had that very early Easter holiday. Did that impact things? So you have to look at how the holidays fall. Did they have one less day? Some of these companies, especially that rely on consumers. And so that's sort of the things that we look at. And then again, you have to remember the further out in the year you go, expectations are always very high, right? And so as you get closer to each quarter, they get kind of reeled into something that's a little more realistic, which is why we say the second half of the year estimates for S&P 500 growth are still quite lofty. But as we go through this first quarter reporting season and we get more of that guidance from companies, you'll see those ratcheted back as well.
What is your takeaway from the bank results that we've gotten so far? I know you mentioned JP Morgan, Citi. We had Wells Fargo and obviously Goldman Sachs today.
Yeah, I mean, the story is a little bit different for all of them. Obviously, Goldman Sachs investment banking was stronger, and that's what we're hoping heading into this year. We're seeing stronger IPO and M&A expectations. For Wells Fargo, Citigroup, JP Morgan last week, I think you're seeing that higher interest rates are starting to have an impact, whether it be on borrowers' ability to repay or, obviously they've profited very well from higher interest rates are great for banks. Net interest income has been high, but now you're starting to see that they actually have to pay up more for deposits. And so they didn't expect high interest rates for this long, and it's starting to have a bit of a negative impact or at least offset the positive impact. And I think you saw pretty much every CEO comment that their core lending income will probably be flat this year. And I think that's why you saw all of those banks trade down last week, despite the fact that they reported better than expected results.
So in terms of what we should be watching the rest of this reporting season, we're very, very early on. But what would be some clues that would be important for investors to glean?
Yeah, so this week we finished the banks, so we move into a bit more of tech. And of course, that's always been a very hot to watch sector, the Magnificent Seven. Do they continue to perform? Do they justify some of those very lofty prices that they've had this year and last year? So we'll certainly be focusing on tech. Also, investor reaction. That's one thing even though only 6% of companies from the S&P 500 have reported thus far, investors have not rewarded positive reporting companies as much as usual, and they've punished companies that miss expectations more than usual. So investors are expecting a lot this earnings season. I just think that's interesting to see so early on here.
Interesting. Now, in terms of buybacks and dividends, you mentioned the data show that we had seen a good amount of that actually.
Yes.
In the first quarter, after some had been on the sidelines.
Yep.
Given the environment now, do you expect that to continue?
I mean, companies are very cash heavy, right? Still at this point. So despite some of the headwinds, I still expect that you will see dividend increases improve. And that's what we saw last quarter. It was the highest number of dividend increases we've seen in a couple of years, which is great. Buybacks, the momentum is still there. I know they're always very controversial. Some think there's better things you could do with your money than buyback shares. But I think you see those continue to trend up this year.
And that would seemingly be an overall positive for the market.
Sure, that is a cue that companies are feeling good about their cash position. They're feeling good about their economic future.
Very good. Christine, anything else we should know about this earnings season?
I think that's pretty much it in a nutshell. Like I said, I think it's kicked off a little less positively than we would have expected. But again, this is just one sector. I think there's a lot of pick your poison. There's a lot of different headwinds going on. But again, you see retail sales were higher today, and the markets seem to like that. Markets are up. Sometimes that positive news can be negative because it means the economy is still really strong. Does that mean less rate? Does that mean no rate cuts this year? But for now, it shows the consumer is still very resilient despite the fact that inflation has remained so high, and that is a positive, right?
Yeah. All right, Christine Short, always with great info. Christine, thank you as always. Christine's the head of global corporate events research at Wall Street Horizon at TMX Company.